Good afternoon. I'm Sherry Kaiserman. For those of you who don't know me, I left my 28-year career on Wall Street to come to this great industry. I had discovered it back in 2013 when I had been head of equities at Wedbush, and we published the first research report on the topic. And in January, I left to co-found Macola, which has a blockchain technology fund where we're about a quarter of the way to meet our fundraising goal. And I remember early on, other fund managers, other CEOs, they would make fun of me when I would talk about that we're investing in equity. Because Macola, the strategy for Macola Capital is to invest in the equity of companies that have the tools and services that enable the broader adoption of blockchain and help the ecosystem. And these CEOs and these issuers would just laugh that equity was a thing of the past and that it's all about the tokens. And I felt like it's a little early to make that determination, and given the fact that it is so early and things are evolving and on a daily basis, we'll stick with equity for now. And then, lo and behold, the industry attracted so much attention because of the amount it had been raising, and the SEC kind of put a kibosh on it and determined that these utility tokens were indeed being sold as they should have been sold with, in compliance with securities regulations. And then that led to a bunch of security token offerings that were really the old ICOs, but doing it in the compliant way. So you were offering a utility token still, which has no rights or ownership of anything really. It just gives you this usage ability, this right to access and partake in an ecosystem. And they were selling it in accordance to securities laws. And then the shift came where issuers started selling ownership. And the fact that you can tokenize securities has led to this spark of creativity, because no longer is it's not about just putting a share of equity into a token, which ultimately will happen when there's real benefits of doing that. But now it's also sparking just different ways of things you can sell, from rev share, it could be a profit share, it could be focused on one particular product, it could be fractionalized ownership of art, of buildings, what have you. And what tokenizing a security does is it gives you global reach to investors. It allows for the transfer of the ownership in this asset much more, it's much less cumbersome, it's cheaper, it's faster, and thirdly, we now have what we've heard termed compliance-aware tokens, which makes the compliance of all of this really nice and easy. And ultimately, we'll have this tokenized marketplace, and with these programmable instruments that are just smarter than the securities that we used to have. And one day, there will be a secondary market that will make this all liquid. And the thing that's most interesting is that one of the most intriguing things about tokenizing a security is the fact that it improves the liquidity. But that is not here yet today. So we're going to get into questions, but before I continue to go down this path and start asking my questions, I'd like for each of you to just introduce yourselves.
Hi, Sherry. My name's Dave Hendricks. I'm the CEO of Vertalo. We're a compliance communications and cap table platform for digital assets, security tokens, programmable securities, whatever tokens. And you might have been laughed at when you talked about Bitcoin in 2013. Imagine how I was laughed at when I talked about issuing a security token in 2017. But I'd like to thank everyone in this room for coming out to this panel to learn about why this is world-changing for so many people, and it's super exciting.
Hi, everyone. Hi, everyone. My name is Aisha Kiani. I work at Republic. We are a crowdfunding platform for companies to raise from their retail investors through a Reg CF offering. We are a spin-off of AngelList. The founder is a securities attorney. So given our background, we're always coming up with complying solutions on how any project can get these tokens, into the retail hands. And thank you so much, Lou and Karen, for having me here today.
Hi, my name is Dan Eisner. I'm the CEO of a company called Digital Reserve Technologies. We're a developer of asset-backed tokens. The project that we're currently working on to bring to market in the first quarter of next year is oil coin digital reserve currency. It's intended to be a true currency, essentially an oil-backed stable coin. And the basic purpose of it would be to facilitate energy trading on a global basis and democratize commodity ownership. When you think about ultimately the types of products that are available through cryptocurrency, it creates a mechanism to develop a range of assets that just don't exist presently. Oil and other commodities are not really in the form that can currently be owned by people. I'm sure there's nobody in this room that owns oil as an investment or as a way to trade commodity value. We think it's important to bring that ability to a global population that wouldn't be possible without blockchain technology.
Thank you. And I'm excited to have you guys here. So the topic of our panel, selling and marketing your token offering. Once a project is ready to go, how do you identify, market to, engage, and find and close the right investors? So how many people are looking to raise some capital here? Just curious about our audience. Okay, great. I have to ask this question, I'm sorry, but if I'm an issuer and I need to raise capital, do I really want to do it as a security token right now? Or do I just want to do it in the traditional way until the market, until there's some liquidity, secondary trading, whether there's liquidity for it? Aisha, take this one.
So I think, first of all, the market has shifted, right? Something that we ask at Republic all the time, does the token really need to exist? So if you think the token needs to exist, then yes, you should be a security token. There's no way around it unless and until you can really present an excellent case of the utility. With that said, we have started seeing blockchain companies that are completely skipping the token model, going towards a traditional equity raise, which is also fine. They say that if we want to do a token, in a years or so, what's the way around it? We've come up with, a legal agreement for that. But I think we're not in that market anymore where every blockchain company needs to be a token because there are only going to be so many tokens in this market.
Did you have something to add, or I have a question for you?
Absolutely, but...
Well, you can add to this too, because all right, for all these issuers in the room, you hear about all these different companies that are doing various different parts of what needs to get done along the way for a capital raise. But where do I start? All right, I have this idea. I have my company. I know I need to raise money. Where do I start?
Well, first of all, you have to start thinking about how much you want to raise and from whom you would like to raise. With security tokens, it's actually quite different. If you choose to raise with a security token today, unless your business is very, very well established and there's a clear reason for a token, you will narrow down the number of potential investors that will want to give you money. Why is that? It's not because tokenization is not a great idea. Tokenization is a fantastic idea for a lot of reasons, and we might not go into it here, but it has a lot to do with the size of the aftermarket, the liquidity market. So is your float going to be big enough? Do you have enough financial results to support your business? There are a lot of reasons that dictate to whom you go and ask for money. And we're going to talk a little bit about Reg D, Reg CF, Reg A Plus as well in here. So why don't we get onto those kind of investment modalities a little bit later.
Well, again, I think a big part of how you go about finding the right investor is understanding what you're selling. And one of the most important things is how you're also going to sell that. So you've got the different kinds of structures, which you can talk about, and then the different exemptions under which you sell them, which will limit the different kinds of investors that you can market to. Can you talk about that?
Yeah, so if you saw the earlier panel with Vince Molinari and Greg Gilman, you might have gotten an appreciation for what some folks in this market think about fundraisers. Raising using a Reg D, which is kind of like a VC round, that's an excellent way to go out to market today. It may avoid the use of a token. Reg CF, for smaller offerings with a little over $1 million in the amount that you can raise. That's a different kind of audience. And then there's something that none of us will be able to do probably for a couple of years, which is a Reg A Plus. Reg A Plus requires two things, which is kind of complicated for this market. One, it requires financial results to be filed. It requires filing with the SEC. And then when a token is involved, it requires people to believe that the token that they're investing in will be tradable on some exchange in the future. Every one of those groups is a different set of investors. Reg D is typically VC. Reg CF is non-accredited investors who like to invest small amounts of money. And Reg A Plus is basically anybody. Yet these really, Reg A Pluses haven't really happened.
Aisha, do you want to go over just like the different kinds of structures, the offering structure that you can do?
So I'll talk about the legal structuring offers that, that could work around it. So one is token DPA, which is Republic's model, traditional raising capital against the tokens, raising debt against the tokens. That's number one. Safest we've come up with, which is your tokens turning into equity. That's how even our own sale was structured. We raised $12 million, led by Binance and Neo Global. Revenue share is something that's going to be used by a lot of these security tokens that are in, current offerings. And there was one more thing. Safe. So safe, again, traditional, just equity agreement, convertible note, and safest, which is our version of equity turning into token.
Does the structure impact the pool of investors also? Are investors flocking to certain kinds of structures?
So I'll go back to Dave's point, right? Like if it's a Reg D, if it's a larger raise, absolutely yes. If it's a retail sale, which is Reg CF, then in the ideal frame, it should be token DPA because, it's smaller sizes of checks, right? We're giving companies an option to raise investors option to raise anywhere from $20 to like $100. So for them, just having a token or having some sort of, part of the convertible note matters, but it's not as sophisticated as, a VC fund that's trying to go into a Reg D.
Dan, we're going to wake you up a little bit. So it was great
Thank
to
you.
have Dan on the panel because he's in the process of going through this right now. Can you talk about your experience?
Sure. So by background, I'm a career lawyer. I spent about 25 years in practice around the private equity groups at a couple of major law firms globally, and left legal practice earlier this year to ultimately get into the development of a security token that we've been working on for probably the better part of 18 months now. And during that journey, have spent a fair amount of time in working with the governmental agencies, the SEC, the CFTC, large investment banks, and global investor base. And so when you think about the development of security tokens, I think everything starts and in some ways ends with the product itself. And so it's really a matter of product development, creating an asset that in fact wouldn't exist but for blockchain technology. And so if all you're really doing is taking a building and saying, well, now it's owned in token form and we're selling it to investors who could have bought it if it wasn't in token form, not clear that there's really been a major step forward. And so what's really wonderful about blockchain technology as it exists is it's for the first time in human history, you can interact on a global basis with investors to accumulate capital and to have that capital trade in a liquid form. Now that's not where we are today, but we are clearly marching down that path, and we'll get there. The second sort of piece of this, and some of the folks have spoken about it on this panel and others, is ultimately weaving a way through regulatory compliance. And it's not just a matter of Reg D and CF and A+. It's really far more complicated than that, because any real token offering is going to be conducted, at least in part, outside of the United States. And when you're doing that, you've got to comply with all sorts of money transfer and securities laws outside of the United States. And so as you really think about what happens in any kind of meaningful scale project, it's not just a matter of doing a private equity offering. And I've been involved in maybe 1,000 of them in my career. In a token transaction, when you're looking at global liquidity, the bars are pretty high right now, but what I'm really encouraged by are what I see as solutions in terms of secondary liquidity coming from some of the ATSs that will be online, that there is a fast path to liquidity through marketing in those channels, at least for accredited investors, that there are dual structures to issue in and outside of the United States and take advantage of the pools of liquidity that exist there. So ultimately, when you think about the range of things you've got to consider, it's not a simple answer. You've got to develop a product and then think about how that product ultimately relates to a very wide range of legal restrictions and frankly opportunities that exist on a global basis.
Can you talk about what kind of service providers you've had to hire so far?
Yeah, so when we started to put Oilcoin together, and as I say, it's an oil-backed stable coin, but oil's different because it's not like you take one single thing of oil and match it to a coin. You've got to match a variety of different markets that are existent globally. And so as an obvious step, you're subject to U.S. securities laws, subject to U.S. commodities laws, subject to the commodity rules and regulations globally, and money transfer. And so at the time I initiated the product, I was a senior partner in a massive global law firm. And what was great about that opportunity is it gave me the ability on an ask basis to talk to lots and lots of my colleagues in different kinds of jurisdictions and specialties. So if you don't know a lot about tax, this is going to be really hard to get done. If you don't know a lot about securities regulation, it could be hard to get done. So I spent a fair amount of time with lawyers of all stripes in multiple jurisdictions. The other thing, of course, is to deal with government regulators. And so we've spent a fair amount of time with folks at the SEC, including Jay Clayton and Valerie Japanik and a range of other people at the CFTC with members of the commission there, folks within Treasury, folks with responsibility for FinCEN, and then dealing with regulators like FINMA and the Hong Kong Securities and Exchange Commission as well. And so it really takes a very broad effort to get something like this done. And then as an addition to that, you've got to deal with a range of accountants to help with implementing FinCEN sorts of plans and protocols, all sorts of developers, both internal to our team and external to our team. The list goes on and on.
Yeah, I want to amplify something that Daniel said. There's a critical difference between an ICO and a so-called security token offering, and it's not that they both have tokens, right? But the team that it takes, the project team that it takes to put out a digital asset or security token is different than an ICO team. If in a technical project, you're typically looking for an entrepreneur who's the lead, and you want a technical co-founder, right? This is pretty much every tech project, and that was certainly something that you wanted in an ICO. If you're doing a security token offering, you probably also want to have an internal legal counsel on your team, not necessarily outside your team, but you might want to look for a legal co-founder as much as you're looking for a technical co-founder like you would in any other project. The reason for this is very, very simple. It's expensive, okay? You need to have really, really good real-time advice. My team, I have a former SEC attorney and a securities lawyer as a co-founder. I can tell you that not having that would make it very, very difficult for us to do our work. I recommend highly that if you're looking at issuing any kind of compliant security in the form of a token, that you get either a very committed advisor to join your team, or you find a legal co-founder. This is going to save you hundreds of thousands of dollars and sleepless nights, because as Daniel just tried to share with you, there are crazy things that you just don't even know about, as smart as you are, as much as you read, that a good securities lawyer is going to help you with. Marketing this thing is not about your ability to sell.
So I just wanted to add one thing to it.
Go right ahead.
Don't think there are ways around it. Dave and Daniel have just said it. Republic has about 7 lawyers, and one including myself. And every single day we come up with a solution. But the best thing is that every now and then when we look at a company that says, oh, but SEC is going to change guidelines, you're kidding yourself. No, SEC is not, crypto is not the best thing that probably happened to SEC. It's seen innovations for decades in the past. They're not going to change their guidelines. The markets will remain the same. The current securities laws will remain the same. Yes, as much as expertise you can have on your team, please go for it.
Just as a follow-up to the last comment, I'll repeat sort of the last thing somebody at the SEC said to me about a month ago. We were in and met with a large group of people, and it was sort of a panel and a little bit of an inquisition. And at the end of it, they said to me, do you have any questions for us? And before I could answer that question with the question, they said, well, we don't know the answers. And so the idea that either Congress or the SEC, CFTC are going to change their rules in any meaningful way in any period of time is just fallacy. And the key to dealing with the challenges that we're dealing with now is to follow the law as written. The government, from an enforcement perspective, will enforce. And what would be terrible is to walk out of here thinking that there are shortcuts of any site. And in a sense, that was the problem with the ICO market in the early days, that people, without really understanding what they were doing, simply put up a net on a web page and said, send me your Ethereum and I'll give you some tokens. And those days are long gone, and they're not coming back, and there should be no misunderstanding about whether that could happen again.
So, now that we've established that you really need a good legal team around you, if you are doing a Reg D, you can do 506B, where I'm just going directly to accredited investors, and the investor has to just tell me that they're accredited, and I kind of believe them. They've signed some stuff. But on a 506C, I'm allowed to broadly market, correct? So, number one, then the burden is on the issuer to make sure and verify that all of the people that end up investing are accredited. How difficult and time-consuming and costly is that? Is that something that you would recommend people look into so that they have this broader audience of being able to generally advertise to?
Well, yes, you need to do that. So there are lots of KYC and AML firms. There's NetKey, there's Verify Investor, there's Early IQ. You can go on Identity Mind. These are all firms that you should be familiar with. And Republic works with a number of firms. Broker-dealers, by the way, have their own thresholds and their own firms. So you will end up learning a lot about KYC and AML. My company works to help issuers manage AML compliance on an initial and ongoing basis. So it's important for everyone to think about that.
So we have limited time, and there's questions I want to get to. So Republic, crowdfunding platform for crypto.
Yeah.
Is there a reason that every issuer should be looking at Reg CF? Because you can do multiple offerings simultaneously.
So CF is still the only way where you can allocate your retail investors, whether it's your community, friends, family, best friend, your dog, if he can invest, whatever it is. I know earlier someone mentioned A+, but what people are still forgetting, no sale has been approved yet. So that's why, whenever we get a chance, we push for a CF sale. It's a great way to market your product out there. It's a great way to bring credibility, and as Dave said, yes, we have a very strict KYC AML process, which we, make sure that we don't let the bad actors come into play.
Dan, what kind of investors should people be targeting when they think about what's the right investor to target?
The answer ultimately is it depends on the user of the product, and so the best investor group is ultimately the party that has some familiarity and use for the product or a track record for investing. The other thing that's enormously important is secondary liquidity, and so as we think about sort of the product itself, it's not just the first investor, because the first investor will own and then ultimately trade out. It's the investor down the chain, and that's really a function of two things. It's a function of the product itself, who the product is targeted towards, and then the regulatory regime to get that product into the investors, or into the subsequent investor's hand.
Can you quickly go over, Aisha, what must an issuer have to engage the investor? What's going to capture an interest? What's going to interest an investor?
And this is something that has come up before too. The retail investor has become a lot more smarter than the ICO's days. They like to see an existing company. It's not a pitch deck. It's not a white paper anymore. Companies like to go on the platform. If a platform is raising, test it out, and then put money into it.
Okay, we can go on and on and on. I could talk about everything about this industry for days. Anyway, we got the hook, so thank you very much. Hope you enjoyed the panel. And who's up next?